Welcome to Epicenter, the hub of innovation in the heart of Helsinki, where ideas come to life and creativity thrives, where innovation meets community. Get ready to learn, network, and make an impact. Let's go.
Let's give her a big old round of applause for that. Hey, everyone. How are we doing today? Okay, there you go. This is the kind of energy that I need. I'm seeing a lot of people here in the front, which is really great, and on the steps. So we're learning from each other. We're learning to get closer, to talk, right? We're going to have to do better than that. Okay, so hey, my name is Joey. I'm the community manager here at Epicenter Helsinki. And you know, because I see a lot of familiar faces, what we do at the first 10 seconds of each of these events, right? We clap and cheer and holler to set the tone. This is a safe space for the exchanging of ideas, and we can only do that if we all feel comfortable, right? Yeah? All right, so let's take the first 10 seconds and let's clap as loud as we can. Go. Yeah. More hoops and hollers. Let's go. 10 more seconds. Yeah. That's great. That's great. And then I sleep tonight and I hear those claps in my dreams. And I think, you did a great job, Joey. All right. Thank you so much for being here today. Epicenter is a community and a meeting arena for local change makers to accelerate their growth and innovate with impact. Epicenter stands not as just a hub, but a testament to the power of community. And community is nothing without all of you here. So thank you all so much for being here today. I want to welcome you all to TECT. This is a series of events for the tech savvy and the innovation hungry. Each month, we explore the latest and greatest in the tech industry, network with like-minded individuals, and learn from top experts. So tonight, we are going to explore open banking and what lies beyond. We'll kick off the evening with a keynote address where our expert will delve into the effects of open banking on traditional banking systems and how it empowers consumers, creating innovation and driving competition. This will pave the way for a panel discussion where we'll discuss what lies ahead. And lastly, we kind of invite you to stick around because, of course, you're not just going to get peanuts and popcorn. We'll have some fast food, and the bar will stay open, and it will be another opportunity to network. Does that sound cool? Yeah, woos already. Okay, we know that I don't do last names, right? Because for obvious reasons. So I'm Joey, and everyone else today will be on a first name basis. So we find ourselves at the intersection of tradition and transformation. As we explore the profound changes sweeping through the world of finance, consider these two facts. By the end of 2020, there were over 28 million users of open banking, and a study by McKinsey highlighted that open banking could boost financial institutions' ROI by up to 1/3. What does this systemic shift mean for our time-honored banking system? How are consumers now more empowered, and how is innovation being fueled? Today, we'll unravel this transformative influence on open banking, offering insights into the game-changing effects on the financial landscape. So our first speaker has extensive experience in SaaS sales and led Azerion, a high-growth digital entertainment and media platform in Finland. Currently, he is Tink's Senior Business Development Manager for North Europe. Tink was founded in Stockholm in 2012, and a decade later became a part of Visa in 2022. Tink is Europe's leading open bank platform that enables banks, fintechs, and startups to develop data-driven financial services. It currently partners with PayPal, Nordea, ABM, Amro, and Bank Norwegian. So please help me welcome to the stage Vesa, who's a Senior Business Development Manager at Tink.
Thank you.
Thank you so much.
Yes, super nice to be here, and already had a chat with a few of you, so I guess the first question is, how many of you are already familiar with, I know Paul, you are, and a couple of people from the industry, but how about the rest of you guys and folks? How familiar? Yeah? Some? Nice. So we have both. Happy to take you through quickly as a snapshot and introduction. So we'll then go more into the deeper talks and kind of what lies beyond when we get to the panel talk with Joey and Paul. So not too much about myself. You already had the right introduction. So I work with our customers, potential customers and existing customers, where we try to find out what is the potential value add, how they can, of course, boost their business with this new way of using data and new services, but also how they can, of course, help their end users to get better off, for example, with their finances, and hopefully can share some light what we see through our platform to this topic. What is it then? Well, already said a bit in the intro, also from Joey, but basically open banking is the exchange of data and services between the financial institutions, such as the banks, a good example, and third-party providers, as an example, Tink. And this is, of course, all based on the explicit consent from the end user. So you don't have to worry about your data being exchanged or shared if you are not willing to do the kind of trade-off that what is in it for me? Like, can I get something back from this provider who would like to check what's going on with my transactions, as an example. Good to highlight, I think I'll take it on the next slide, but this is also driven quite a bit by regulation. So both in the European Union, but also in the UK, the banks have had to basically open up APIs, so interfaces to let those end users give the consent to exchange the data. But I think that, at least for me, a big surprise was that open banking dates back quite a long time, actually. The first use cases that you could label as being the front runners of open bank is actually in West Germany, where the post office and one of the banks built a text TV based solution for you to aggregate your financial information into a text TV page, where I used to do that before the internet, looking at the football or NHL scores. But back in like 1977, when the first Star Wars movie came out, you could actually already check your account details on your text TV. So it's been coming for quite a while. I'm not going to go through all of the steps here. Already mentioned the regulation enforced 2016, and when it has to go live with the APIs for the banks was 4 years ago in the autumn of 2019. So ever since then, this has been growing. This has been in the usage, and I will show a bit of the numbers also. How much has it been growing, and what's the main use cases that we see from the Tink platform that are driving the matureness. Maybe I need to also highlight that we are part of Visa, which is why I'm also here. We sit in this building, great place to work for us, and happy to organize this session together with the Epicenter. So part of Visa, which is great, of course, for us. Joey already mentioned this, but there's about 28 million end users calculated by the end of last year. Growth rate 53%, so it's taking a lot of steps forward with the, getting into active use. And then if we put it into context, we have in the same market, we have about 350 million adults. So there's a lot of room for opportunity. There is still a lot of people who haven't used it or who don't even maybe know about it. It could be actually something that you might be willing to use, but you still just aren't that familiar with the actual use cases. The one that I think many of us, because we are in Finland, are familiar is the account-to-account payments. This is one of the markets where it wasn't a huge kind of news to us that you can actually pay by bank. In some of the other markets where it was driven by cards or invoicing or other solutions, when you shopped online, it's actually kind of a new thing, and you need to teach the customers and the end users that you can actually just authenticate with your biometrics, choose your account, and pay for the goods. Don't have to remember the details or card numbers, etc. And what we see now in Sweden, for example, is that we have a partnership with this digital invoicing app called Kivra. I think they're active in Finland as well. But 60% of Swedish adults are already paying their bills month by month on Kivra through the open banking rails. So in some of the markets, it's actually already in the tipping point of becoming very mainstream. onboarding processes. And I'm going to snap through these quite quickly because we want to get into the discussion and share more insights between us all and open up for questions as well. But we all know that if the onboarding process of an app or a web service is clumsy and slow, it's so easy to click the back button and or delete the app and take the next one. So here, in any time when the user would need to verify their account or input account details in the onboarding process or a payout process, let's say you want to get paid from a gig work solution or from a platform, get your money back, just by kind of showing your face or fingerprint, you can get to it by open banking. The next two ones are more related to the growing demand now with the cost of living crisis, which is unpleasant, but as we all know, the interest rates, the food prices, energy prices, there's a lot of people in a bad situation across the markets, globally as well. Where open banking steps into and where we see that banks and lenders use it is actually to help them tackle those kind of blind spots that the traditional credit scoring methods have been lacking and having. So basically giving the people who want to get a loan, want to get into financial products, the opportunity to easily prove that you have the affordability, you have the bandwidth at the end of the month to get to that loan. Think about expats, young people, gig workers, entrepreneurs, promoting the inclusive lending, not just for the benefit of the end users, but also for the lender to actually make those underwriting decisions more accurate, faster, and be able to promote inclusive lending from their side as well. The other one is very obvious related to this is that by collecting the financial details for me as an end user, you can actually offer also solutions that make the customer understand their finances better. So where am I spending? How much is going to restaurants? How much is going to groceries? And what can we do about it? How can I get better off as a customer of the fintech or the bank in the market? So this is something that we've seen grown a lot, and the demand is growing from the customer base. Very much. We just had a research where half of the Brits who answered, the end users, were actually willing to change bank if they knew that the competing bank had a solution to get better off with your finances and get real digital tools to budget and save better. I will leave, I know Joey, we're running out of time soon, but I will just showcase this quickly and then show up just a snapshot of what's coming up in the regulation as well. One of the latest innovations as well has been not just on your finances, but how can you analyze the banking transactions to help you with your CO2 impact. So this is a company from Germany called Ecolytic, who are building tools for this. So you share your banking data and they return it back to you to actually see that this is your current footprint, and by this and this and these actions and based on your personal tweaks and insights into it, you can actually nudge them into a better direction. And we see this also with the banks helping with finances and at the same time helping with the sustainability side of things. So we clearly see that it's changing the future of finance. I don't know if some of you saw, but actually today I think it was announced that in Apple Wallet you can soon start to, at least if you are a UK user, you can start to see also your bank account details and balances. So when you check the card and you want to pay off, you can actually see directly on their UX how much you have on that specific account. So the big ones are going for it as well. But regulation-wise, there is anticipated in 2 or 3 years from now an act from the EU called Financial Data Access, which is the next step that we call the open finance in the industry. Meaning that it's not just your everyday checking account data, but you can actually share and as the service provider aggregate all of the financial information if the customer wants to share that. And just an example of use case, compare and challenge your mortgages or existing investments in another place and provide your solution and overview and try to help your customers again with their finances. And not so far away also actually the open data ecosystem. So telco, healthcare data, utilities, and again, it sounds scary with your health data, for example, but nobody's forced to exchange anything. It's the end user is always in charge. But that's from my side to kind of kick off the evening and give some insights into it, and I hope we can have good, deep insights and discussions from industry veteran Paul here as well. So happy to welcome you guys to the chat.
Let's give us a huge round of applause.
Thank you.
Thank you so much, sir. You can please take a seat.
Yep.
That was great, huh? Yeah, Joey, that was so good. Vesa did such a great job. Okay, so to round out the panel, I'd like to invite an accomplished Chief Technology Officer with more than 20 years of experience in delivering digital transformation in the banking industry. With extensive experience or expertise in open banking, embedded finance, and core banking transformation, he drives tangible business outcomes, playing a pivotal role in aligning global banks with industry-leading vendors and fintech companies. As an IBM CTO, he leads a global team harnessing IBM's strategic partnerships with core banking and payments fintech vendors while actively engaging with the wider fintech ecosystem as the co-host of the podcast FinTech Daydreaming. So please help me welcome to the stage Paul, CTO of Global Core Banking and Payments ISV Practice at IBM Consulting. Please welcome. Thank you so much, sir.
Thank you.
Anywhere you'd like.
Welcome. I know you too well. We shouldn't keep shaking hands.
Okay, so thank you so much for being here today. So let's jump into the transformative world of open banking. Together, we're going to explore the vast opportunities in this dynamic sector, the pivotal role of APIs, the potential of open banking to invigorate underserved markets, and the diverse models of executing open banking. Moreover, we'll delve into the pressing questions of market consolidation in the open banking sphere. So with such critical topics up for debate or discussion, I'm just going to begin. Is that okay?
Absolutely.
Okay, perfect. So open banking stands as a beacon of innovation, even in tumultuous economic times. Where do you see the most promising opportunities around open banking innovations?
You want to start?
I can start,
Yep.
yeah. So from my perspective, open banking is a step on a longer journey. It's fantastic what open banking has already done. I think the drive started with PSD2 in Europe and or mainland Europe to force banks to open up, to supply data to third parties. But if we actually look at the whole way that the banking industry is being turned upside down, what we're heading towards is what I would class more as embedded finance or beyond banking. Because as consumers, particularly in the retail sector, retail banking, even when you look at small SMEs, medium, small companies, we don't want to do banking, right? Banking is not something we consciously want to do. We don't wake up in the morning and go, hey, I want to go and talk to my bank, right? We just want banking to happen. We want to know what our financial standings are. But just like when you get out of an Uber, you just want it to seamlessly pay for you. So when you start looking at the journeys as a consumer that you make, they're not with a bank. They're with third-party platforms. They're with platforms that deliver capabilities to you, whether that is, Uber or an app or whatever the case may be. We want our financial life to be embedded in that journey. There's a fly here. We want our financial life to be as much as possibly embedded into that journey, right? We don't say, gosh, I really want to get a mortgage today. We say, I want to get a house. Same thing. The whole mortgage part of it to us as individuals is actually a painful bit. We need it. We don't necessarily want it, right? So I think open banking is helping to drive that fundamental disruption. And it's fantastic for us as consumers. It's great for companies like Tink. It is a Kodak moment for a lot of the large banks.
the same question.
Yes, and I agree. And good to add on that is we're seeing also the banks, the traditional banks, to go to that track to enhance their capabilities and not just kind of comply to the regulation, but really go beyond and aggregate the multi-banking data from the other providers in their markets. And also, I think, Paul, you probably have something to add, but go to like banking as a service solutions. We've seen that in the Nordics as well. So that all of a sudden the banks become tech providers for fintechs or other parties as well.
And do we see the uncertainties in the economy as a positive or negative effect for open banking?
Neither.
Okay.
I would say. I would say that we're on a continued journey of innovation and disruption, and the state of the economy. It's a circular thing. We've had this before. We're going to have it again in the future. But I think the focus on digital, the adoption of digital, particularly the younger generation, the digital natives, this is a no choice for the banks or anything. I think it has nothing to do with the economy.
Yeah, where we see it actually was on the use cases as well, that kind of looking to the end users, and that they're trusting their banks, but they're kind of saying that we're not seeing that much of that extra mile from the banks, like how can you help me in my personal financial situation? So that's something that we see linking back to the economic uncertainty from the consumer's point of view. Please bring me something or contact me somehow, and the digital channels are pretty scalable and good way to go for that.
Right. So the evolution of open banking, especially through the use of application programming interfaces or APIs, has ushered in a new era of consumer benefits, since we're just mentioning them. So could you highlight some standout innovations in open banking ecosystem that have significantly benefited consumers?
Yeah, I kind of already stole my thunder on that question, but those like cost of living crisis related use cases, definitely that inclusive lending. Really people are saying in the studies that I'm not getting access to loans or finances easily. I'm getting denied. I don't have that credit history. So there we've seen a lot of growth and demand on solutions that check into the full picture of your finances. And then, okay, we actually run another check on the transactional data, and we find that we can underwrite the loan or give out a credit card to you based on the check on open banking. So,
Paul?
I can think of an awful lot of very good examples, but I'm going to step outside of focusing on the Nordics, because I think most of the innovation that we're seeing is actually happening in emerging markets. So if you look at the growth of super apps, a great example would be SBI Yono. So State Bank of India came out with a super app called You Only Need One, where they have created a ecosystem based upon their banking capabilities, which once you've got the app, you're a customer of SBI. Not only do you get your banking capabilities, you get retail capabilities. You can do food shopping, you can do clothes shopping, you can do a whole lot of other things with inside of that app. Another great example is how WhatsApp are enabling payments with inside of WhatsApp. As another great use case and an example. We won't mention his name, but it was Twitter, now X. You all know who I'm talking about. The capabilities that he's looking to implement into X around payments, another great example. And then if we step into the SME market space, there's a fantastic example again in India, built by Baroda Bank, called Kisan, where they've created an ecosystem platform for agriculture, where they've basically pulled together the whole ecosystem to support the farmers, from seeds to agricultural machinery to weather information, all of that integrated into a mobile app, right? So farmers can start doing sharing of tractors. They can lease the tractors with financial support from Baroda. And then back to what you were saying around the minute all of those transactions happen through a single bank entity, that bank gets clear visibility on the risk profile and the financial capabilities of all of the farmers, which means that they can find better ways of supporting them financially, giving them better loans, giving them better ways of managing their cash flow. Because for farmers, you buy the seeds, you don't actually get any reward on that until you harvest. Well, what the banks can do is to say, well, you pay for the seeds when you harvest, right? We'll give you the loan in the middle. Another fantastic example of where we're seeing open banking and embedded finance going.
Yeah. I see the wheels turning. Do you have anything to add?
Nothing to add on that one, yeah.
Yeah.
Great example. Haven't heard of that before, so nice to hear.
Well, open banking isn't just a buzzword, right? It's a growth catalyst for consumers and businesses alike. So can we share some success stories where open banking has notably provided additional services for underserved markets?
I think you just kind of gave one already.
Another one.
Yeah, but to add from my side, what we've seen actually in Finland and kind of a startup coming from Finland or a scale up going to the other Nordics and Europe is a company called Servant, which is helping SMEs with their invoicing and kind of financial planning as a platform. So they integrated open banking payments, but also the account aggregation parts of it to help these SMEs to not just utilize their platform for the invoicing part, but to actually see the financial details, how's the balance, how's the kind of money rolling this month, and then also if you get invoices from the other partners to you, you can just through this embedded kind of a payment flow, pay off your bills easily. So also actually lowering a lot of costs from the SMEs.
Another example that we can bring up is one that everybody knows, and that's back to Uber. I mean, it's important to point out here that we've stepped out of just open banking. We are now talking about embedded finance as that the wider sort of slice where open banking is a part. But if you look at Uber and talking very much like you're saying, the less fortunate, the underbanked, whatever the case may be, Uber identified very early on that they had a large demographic of people that wanted to be Uber drivers. But they didn't have potentially a bank account, they didn't have a credit history, they had difficulties getting a bank account, they had difficulties getting a loan. So what Uber did was they partnered with a bank using open banking APIs and capabilities and created a banking capability for their drivers inside of the Uber app. So as a driver for Uber, they will pay your salary directly into that account. They will give you a loan for a car. They've got a leasing agreement so that you can get a car cheaper. You'll get the insurance with it through Uber. And that way, again, Uber can hedge that risk based upon the fact that they've got full visibility of what you're doing. But they're not a bank. They're offering you a banking capability.
So we've mentioned banking as a service and embedded banking quite a bit. So I have a question about that. So there's a big discussion around what the best model is for open banking, whether it's banking as a service, banking as a platform, or embedded banking solution. So in your opinion, which model, in your perspective, holds the greatest promise?
This is where I think we're going to end up in an argument.
That's why
that's where you want to go. Right? You're trying to get a fight. So first of all, I want to re-emphasize open banking, as you said on your first slide there, is predominantly just about sharing some of your data associated with you in the bank to third parties. That's it. That's all open banking is today. It's going to be expanded a little bit, but like you said, we're moving into open data, open everything else. But open banking today is predominantly just about your personal information and around your account data, nothing else. All of the other terms that we talked about, you said banking as a service. Banking as a service is part of that journey towards third parties providing banking capabilities to a non-banking entity that wants to utilize those banking services. So it's much wider than open banking. The most important part of banking as a service is the fact that you need to have a licensed bank providing their license to that third party as well. So you're starting to see a trend of two different entities coming into the industry. One is the banking as a platform providers, which are providing the whole banking infrastructure to be able to do banking. And then the other one is banks saying that they either want to take part of their infrastructure and make it available externally through APIs and then support that with their own license, or they will partner with a banking as a platform provider supplying their license to it so that the third party entity, the end consumer, can reuse the license from the bank. A great example is Apple. You mentioned, both of you mentioned Apple, right? Apple is not a bank. Apple, I would say, never wants to be a bank. They might do in the future, but at the moment they don't want to be a bank. But they're delivering banking capabilities, everything from Apple Pay to, Apple Saving in the US and everything else. Well, they're using that because they are piggybacking on the license of banks that they have partnered with in the US, right?
It's not going to be that big of a fight, actually, Paul. Here. So,
Darn it.
let's see if we get it later with the questions. But how we also see it, I think open banking is part of the connectivity layer that we do. So I'm thinking about now banks and lenders, how we help them with their business and their customer flows. So be it their own first-party transactions that is ingested, or be it the open banking data. But really what we see kind of now thinking about like Tinks USBs and our business is that we are the kind of data enrichment platform that actually powers up use cases, no matter basically if it's the first party data only or connected through the upcoming open finance or open data or the existing open banking data. And then on these models, to me it's more about like how the banks will take their track. Is it just about the compliance and do what the regulation says, or will they start to enhance their own channels and propositions, start to build up these embedded banking offerings and platforms, as you said, to non-financial entities, or maybe embed external insurance, fintech, reward partnerships to their banking channels and propositions. So we are then kind of more of a consultant and brainstorming how and if we could help them through the platform and through the connectivity to achieve what they want to achieve.
Yeah, okay. I thought I was going to get a bit of a fight on that when I started for leave to this moment. But okay, as open banking reshapes the financial marketplace, there's a looming question about the competitive landscape. So does the proliferation of open banking lead to a more consolidated marketplace? Is there a possibility that only a few players will dominate the open banking arena? Or, and if that's the case, how does innovation continue to drive in such a space?
I think we need to partially then look at open banking from different perspectives. You've got open banking from the banks themselves that are creating APIs that can be accessed by third parties. You've got intermediaries or aggregators, a certain place where Tink is sitting, that sit in the middle between the banks and third party organizations that want to take advantage of open banking. I think one of the issues we've had with open banking up until today, where we've seen a proliferation of aggregators, is that open banking tells you what you should be doing, not how you should do it, which means that every bank are entitled to interpret what an API should look like. And that's become a headache for an awful lot of fintechs and companies that say, I want a simple use case. I want to create an aggregation service. I want to be able to give everybody in Finland the ability to see all of their accounts across all of their banks in one place. Well, each of the banks specify things differently, so this fintech then ends up having to go and program for each of these. You then see a growth of aggregators that say, we will deal with that space in the middle, right? There's a fintech in Finland called, is it Open Banking or Banking?
There is an aggregator called Enable Bank.
Enable Banking, that's the one. That's a great example of an aggregator. So I think we're going to see a shrinkage of aggregators. I'm going to put my hand on my heart and say I sat in a panel discussion 4 years ago and I said the future of aggregators is dead. I can't remember if you were there.
yeah, maybe in the audience.
Yeah, it was in Sweden. I said the future of aggregators are dead because as banks start to unify their APIs, the focus of aggregators are gone. And if you actually look at most banks now, I don't know how many here have got, for instance, the Orpe app. Right? If you go into your Orpe app, you can actually now say that you also want to see your Nordea accounts. You can also say you want to see your Danske Bank accounts. Yeah. If anyone here has got a Revolut app, they've got an even larger plethora of banks where you can actually go to Revolut and say you want to see your Orpea apps transactions. That's without any intermediaries. So I think we're going to start seeing bank to bank, the intermediaries will disappear. When we look at non-banking offerings, I think we're going to see a growth of intermediaries because the banks will trust the intermediary more than the platform.
Yes.
Yeah, going back to that consolidation question, I think I see it in a way that everyone has the ability to innovate on this. No matter if it's the good old definition of the one person with their dog in their garage building up something now based on this new infrastructure, or if it's the big ones from California or Asia or the traditional banks. But we all have now this opportunity to get access if the user wants to do that trade-off of exchange of the data. So I don't see it in a way that it's making it harder for anyone. Everybody has the ability. And also the traditional banks are really going for the enhancement of their solutions.
So you don't see a fear in innovation in any way?
Well, innovation will happen and change will happen, but everybody has the cards on the table to tap into these solutions. And of course, we're one of the ones happy to provide the backbone for that.
25 minutes goes really quickly, and I got some feedback last time that I didn't leave enough time for questions. So I know that there are a lot of smart minds in this room today, many of which who work in the banking industry. So my colleague Paulina is going to walk around with a microphone. We're recording, so if you have a question, please raise your hand now and speak into the mic so that we can hear it on the recording.
What is actually the volumes in this open banking? Is it a seasonal or like any specific area you see the bulk?
Do you mean like the usage in general?
Yeah.
The latest report, what I had also on the presentation, was end of last year there was about 28 million users across the EU in open banking. The growth rate has been around 50% year on year.
So who are the typical end users actually? You are really getting a bulk end users, like what kind of a profiling you have, like the people who are using rampantly rather?
Yeah, we don't really have, we are kind of providing the infrastructure and the backbone, and then it's the banks and the fintechs who are the customer facing channel, enhancing their customer journeys.
Because Paul is saying about the SBI, actually I'm the account holder of SBI and I have an NRI account. And I use like a tissue paper, seriously. Thank you.
Is there another question? Come on, there has to be. We have some experts. Yes.
Hey, sorry, I'm a bit of flu. But yeah, of course we started talking about the PSD2 and talking a bit also about the open finance, but what about this kind of, let's go the middle point here with the PSR and PSD3? How do you see it as maybe as opportunities or even challenges, both for the fintechs and the banks? What's your opinion on that?
For the bank, for the bank, it's a challenge. It always has been a challenge for the banks. PSD2 was a challenge for the banks, and some banks managed to deliver on it. A lot of banks didn't. A lot of banks missed the boat because they saw it purely as I have to deliver against compliance or regulations and didn't realize the bigger picture and the opportunity that was in front of them. I think I'll expand that a little bit further and say most banks are heading for an awful lot of hurt because there is changes coming and the traditional banking models does not support this move towards a consumer-driven pull business model that banks have to adopt in the growth of ecosystems. So unless the traditional bankers understand what this new world looks like, they're going to face their Kodak moment.
Yeah. And then kind of on the PSD3 and the PSR1, so there is this Payment Service Regulation 1 coming up. To my understanding, it's more still about the kind of PSD2 world with the checking accounts and making a bit more clear what the APIs actually should be like, removing obstacles. So there is a lot of takeaways for the banks to kind of take one more round further with the existing APIs that have been enforced. But we do have a lot of content to share, so we can talk about it later on and share our findings on that.
Cool, thank you.
One more question? Okay, I'll ask. Yep, there we go.
Thank you. Can you hear me, guys?
Absolutely.
Great. One quick question because PSD2 is opening up APIs, account information and payment initiation. In your personal opinion, how mature Nordic banks are with monetizing APIs? And should they concentrate more on that one?
Good question. And I know who asked it. I can see you. No, banks are very bad at monetizing the APIs, and part of that comes back to what I said a minute ago about the business model and the approach that banks have got towards this new way of operating. What a lot of banks have done is they've said, open banking is a new channel for me to push existing products. And that doesn't really work because, like I said, banking is becoming a pull business rather than a push business. You can't push products out anymore in a digital channel to clients. So you need to find new capabilities and new offerings that will actually satisfy customers in those customer journeys that they are in, being driven by third parties. The banks become invisible. They have to step back and find new services that they can deliver. Yes, there are some that's mandated through PSD2, but they're never going to be money makers. They are just forcing you to open up. When you look at open banking and additional capabilities that you can deliver, this is where banks need to step out of their comfort zone and say, what is the capabilities that I actually need to develop for an external ecosystem of partners? And until they figure that out, they're not going to be able to monetize or get any good return on investment on any of these APIs.
One additional example of actually monetizing and commercializing the APIs is from the UK, where they have these variable recurring payments on commercial side. So basically, if you would like to do similar subscription payments as you could do with the direct debit card on file type of payments, the banks are actually providing with a price tag, but the opportunity to do this on account-to-account payment rails, and for the end user to set up like clear ways of how much they're willing to pay per month and control the kind of the direct debit setup better than before. So there are some examples from the wider region.
Can I ask a question out?
Yeah, of course.
Can I ask I can't actually see you guys. I'm going to ask you to stick your hands up. But how many of you?
We can't hear you unless you have the mic, and we're recording. So just give it one moment.
So is premium-based services, is banks are afraid to launch or something like that? They are like very skeptical, like people are not going to buy in, like if there is a value add for that. I can give you a kind of a nice example, like, you know, when SMS rolled up in the first time in the world, Norway is the country which really reaped the premium SMS. So as you said, like, you know, the APIs and the special this thing where you have a value add, but like how do you push into the market is most important.
I have to be honest and say I didn't quite get the question. Sorry for my naivety. Could you rephrase it?
I'm saying that, like, as you said, like, if you can provide some add-on services, so you can sell it as a premium. So you already tag in so that, like, people don't, if you can push into the market, like, as you said, like, most of the banks are afraid to push the services. So, but if you really take the risk, the reward is very, in fact, it's quite phenomenal because when the early days of SMS, you know, SMS like text messaging, Norway was charging almost 10 kroners per premium SMS because nobody was there to step in. So that's a kind of a dilemma with the banks. I'm just tweaking up.
We're getting quite broad here now, but from my perspective, and from what I've learned with working with the banks, it's not quite. I mean, banks are, for all good reasons, risk averse, right? By design, banks are not flexible and agile, right? Because they have to be stable. I think the main issue has been that banks don't understand how to transition from traditional banking channels and banking products to new types of capabilities and products that they can externalize. Forget what the the financing model looks like and how they're going to charge. I mean, most of them will probably find a way of doing it by subscription or some other way. The risk is to not end up in a commodity-based business, right? And that's the other issue you've got with a lot of banks. You end up with a race to the bottom. Who can do it the fastest and the cheapest? That's not added value. So you've only got a small period of time, like you mentioned about the SMS. There's only a small time before everybody else does it, and you're in a race to the bottom. So back to the example I gave from India with Baroda Kisan, right? The value proposition that Bank of Baroda has put in there is not about we will give you the cheapest loan and someone else can come in with a cheaper loan. Because they aggregate the whole ecosystem, they've got the partnerships with John Deere, right? So by having the partnerships with John Deere and going to the farmers and saying, we can give you a discount on a John Deere tractor, in actual fact, what we can do is we can help you to pay for it on an ongoing basis, and you can share that cost with your neighbor farmers. But the only way you can do that is that you need to have the leasing agreement through us, right? That's the sort of models that banks need to start looking at. Yes, it's a very successful model. Yeah, it's actually now being repeated in Latin America by a different bank.
Okay, how was that? You wanted to ask the question too.
Yeah, I wanted to ask a question, but I can't actually see everybody very well. But how many of you would be, put your hands up, how many of you would be willing to share your financial data to be able to faster and easier get mortgage quotes across multiple banks? Yeah.
It's about 85%.
About 85%, yeah. How many of you would feel comfortable to let your current bank have access to read your account data and make transactions on your behalf with any other banks that you've got accounts with? That's interesting. So
that's about 5%.
It's about 5%. Okay. They're both basically the same. They're using the same APIs and the same accountability. The only difference is that you feel that in one, you're getting a lot more value.
Yeah, exactly.
Perfect. Well, let's give a huge round of applause to Vesa and Paul. Thank you both so much.
Thank you.
If you head down, I'm going to do a little more business on my end, but thank you so much for joining. And they're going to stick around a little bit for some more networking and questions. But please keep clapping for them until they get off the stage. Okay, thanks. Awesome. Hey, so thank you all so much for being here. As I mentioned today, earlier, we are a community, and this is exactly what we're supposed to be doing, right? Asking questions, bringing topics to life. So if you'll indulge me for 2 more minutes, I just want to talk about a few upcoming events that we have, and then food will be passed around. So on October 3rd, we're going to host our monthly afterwork. This month's theme is going to be focused on founder stories. So come be inspired by local founders who will share their journeys, hear the good, bad, and everything in between. There'll be QR codes on all of these if you want to sign up. On October 9th, SESTOC Local Helsinki returns to Epicenter Helsinki. This is a quarterly meetup for SaaS professionals. During this event, we'll ask, what does it mean to be data-driven? Is it product, process, culture, or everything at once? And why is being data-driven so important? On hand, we'll discuss several cases and learnings from the VP of Engineering of AlphaSense and the co-CEO of Supermetrics. On October 10th, Hired returns. This is a monthly series that we do to look at all things talent. On October 10th, it's Hired, Closing Doors or Opening Opportunities. This is decoding Finland's strategy for international talent. This is in quotations here. Finland will be the most interesting place to invest in by 2031. This was a worthy and ambitious goal set out by the Finnish government, formed in 2023. Epicenter Helsinki and AmCham are joining together to ask how the government's approach to international talent supports this vision. The panel of government officials and business leaders will discuss 4 main areas. How will the local entrepreneurial system be impacted? How will foreign direct investment be impacted? And how will individual people be impacted? And then overall, what's the impact on Finland in general? And then to round out the month, we're going to host a little Halloween special Don't get creeped out by her behind me. We're calling this Hack-O-Lantern. In a fleeting 60 minutes, band together with your team to confront the most daunting fears faced by entrepreneurs. Deep dive, innovate, and channel the spirit of Halloween, not just with your brains, but also with a pumpkin. And did I mention that there will also be a costume contest as well? So come dressed to impress, but also be ready to solve your fears. Hey, thank you all so much for being here today. I'm Joey. We're going to network. The music's going to come on. There's going to be food. Stick around. Thank you all once again. Thank you.